Okay guys, Saturday the 21st of October and we are on the S&P 500. So it's one of the new markets that I am adding to the analysis videos. The two US markets, the S&P and also the Nasdaq, will be posted up on Saturdays, and then on the Sundays the FTSE 100 and Australian dollar, US dollar as normal. Now because this is the first week on the S&P, we're going to go a little bit more in depth. We're going to look at what the market has been doing longer term. And then next week, we will just be doing exactly the same that we do with the Sunday analysis videos, having a look at the market in terms of and what happened in terms of the previous week's analysis, and then looking at the market for the trading week ahead. Okay, so just before we get started, if you are watching these videos, if you do appreciate the analysis videos, please just take a second to hit the like button down below. Only takes you a couple of seconds. It lets me know that these videos are being well received, that you're using what I'm putting online for your trading. Okay, so S&P 500. So the main thing really is that the market has been in a long-term uptrend. It's pretty obvious, looking at this market, a very, very strong bullish price action. Now, when Trump came into office, I think pretty much the whole world was expecting stock markets to collapse, especially the US markets are expecting very, very bearish price action. However, the exact opposite happened. They continued to put in strong rallies. So for the S&P, there's a few things longer term. Let's have a look at a few different trend lines. So we have one sitting right here. We have one, let's just move up a little bit, sitting right here. And then to the upside, we're looking at how this market has been chopping along. So let's take the previous highs round about here. Okay, so for the longer term view on this market, what we can see is it has been finding support. Key levels are the sloping support line down below. You can see we had the market trying to break down, finding support, trying to break down once again and finding support. Now the central line, what you can see is the market using this pretty much to continue on its bullish trend. Multiple tests at the level. When we break down below here, we come back up, we try to retest. And then what you can see from the last couple of weeks is the market broke up above this level, and then we had this pausing price action. Now, something to go over with, I see this all the time with traders. When a market is in a very strong trend like this, you need evidence before you start to look for the reversal. It doesn't mean you can't be a counter trend trader. I take counter trend trades all the time, but when it becomes a problem is when the market puts in a very strong rally like this, and then you start hearing people saying it can't go any higher. It's put in such a strong rally, or it's due a correction. And when you start hearing things like that, when you start seeing things like that, all that happens is people start getting short, the market continues to rally, and it decimates your account. The market can always go higher. As long as people find value and keep buying, the market is going to continue to rally. So how many people do you think seen this? I'm talking about longer term traders now, higher time frame traders. How many people seen this and thought this is the market starting to struggle? We want to start looking for the correction. They got short Friday, very, very strong bullish movement. They all start to panic, they all exit the trades, they all get stopped out. Always let price action dictate what it is that you're doing. The price action charts are literally a map of what is going on in the market. They're showing you exactly where the money goes. Now, you can't hide that. When the money is invested in the market, it is going to be shown on the charts. It doesn't matter how sneaky a trader you are, how good a trader you are, what your pension fund is doing. When you put the money in the charts, they cannot hide what they're doing or where their money is going. So we can use that as evidence to basically ride their coattails. That's what we're doing as traders. We're trying to ride the coattails of the bigger boys, people who are dealing with hundreds of millions of pounds, billions of pounds. We're trying to jump on their coattails, ride the moves, and make money. So coming into next week on the S&P, what we're looking at? Well, the first thing is we're coming up into this sloping resistance line. It's worthwhile watching up here for those potential bearish reactions. We have the evidence that you can see, even when we broke above here, we came down, we retested, at these levels. When we break down, we come up, we try to retest. We break up here, we break up here, we try to retest. You could almost argue that it's a little bit tighter. You could almost just bring it down a little bit to take into account these previous highs. But for me, where it is sitting at present, that is the main area. As the market presses up into that level, I'll be happy to start looking for potential weakness. Now, if we break up above, it's worthwhile looking for a holding and continued bullish positions. Something similar to what we've seen back in March of 2017. You can see the market breaks up, it comes down. Now, it doesn't hold. You would almost consider this a false break, but it does give a couple of bounces. As day traders, this is absolutely perfect price action for us to look for those long positions. And then when the market starts to fail at that level, it's telling us that the S&P is not finding value above this longer term sloping resistance line. And it gives us the clues as we move forward to look for the reactions up toward those levels. Okay, so for the longer term uptrend to end, so for a stronger correction, I would really be looking for the break below this level now. And then a break below the longer term sloping support line for a stronger correction. And what we're going to do is, because this is the first week, we're going to go over these key levels. So what I'm going to do is get rid of everything on the chart, and we're just going to start looking at key price levels in terms of structure. So for longer term pullbacks, now what you tend to find is that in an uptrend, so when the market is making those uptrending movements, in a strong uptrend, first of all, the pullback, you don't always see the pullback coming back to retest the structure. So something like this, you get the structure, we break up, we pause, and then we break up further without retesting. And we then continue. Now, for me, where I find the strongest levels on pullbacks from trending markets is, sure, at the structure levels, but also where the structure levels meet. So where the market sells back down and it finds previous resistance, which has become support, and then it bounces. So the key levels for me on this market, longer term once again, would be down here. So around about 2,500 down to 2,480. You can see the market finding resistance, breaking up above, bouncing on this level, and then moving higher. Now, down from there, a very, very strong level of support would be all the way back down into these levels. So around about 2,430 down to around about 2,400, just a little bit lower. The market testing, breaking up, testing, and then bouncing. So we're looking for the areas where the price action overlaps. When you see those overlaps, it tends to be a lot stronger support and resistance. Now, why that's also important is because if we start to see the failures at these levels, it's giving us the clue that potentially we're going to see the stronger moves down into those next key levels. Okay, so now let's start dialing into this market and coming into next week. So we have that sloping resistance line first of all. We also have this previous level of pausing price action right here, really up into around about here. So around about 2,560 down to 2,550. The market has now broken up above this level. Pullbacks, good to look for potential support and further bullish price action. Now, below this level, so really 2,545 down to 2,540. Below this level, if we start to fail here, so again, it's potential support. If we start to break through, this becomes a great area to look for resistance. And then we'd start to look for that stronger correction in terms of the uptrend. We're waiting for the evidence. We're not just selling because the market has made very, very strong movements to the upside. It's a terrible, terrible way to trade. I see people, just because I'm on Twitter, I like to sort of scroll through Twitter and see what other people are saying. The amount of people who are traders who say the market can't go any higher because it's already put in a bullish rally is ridiculous. It's one of the fundamentals in trading. If you're going to start just selling into markets because they're making big movements, you're going to have a bad time. Your account's going to get very damaged. So we're looking for the evidence. That's what we are. If you're watching these videos, I'm presuming you're a price action trader. You're looking for the evidence. Price cannot lie. If we start to break down below these levels, we'd start to look for a stronger correction. Let's just have a look. Really, the move up started around about here. So let's. Now all I'm doing is putting this up into that sloping resistance line for the potential and for that reaction to come from those levels next week. Now what you can see is if we do see those reactions, 23.6, 38.2, both lining up with those key levels of support, worthwhile looking for the bullish bounces. If we start to break down below, really at least the 61.8% retracement on the Fibonacci, but I would still be looking for the stronger move down into previous structure. If you zoom out on this market, you can see there's nothing. The market has not traded up this high before, so we have no key levels of structure to the left to give us that evidence. And that's why I would start to look for the stronger move down. So really, those are the key things going into next week. The market is still bullish. Now I'm going to be watching at that sloping resistance line for potential bearish reactions. If we see it, the potential pullback into this level of structure where you begin to look for the bullish bounces. If we start to fail at this level, then we begin to look a little bit more short to medium term bearish, looking for a stronger correction, potentially all the way back down to 7.5, around about 7.515. Okay, so that is everything for this week on the S&P, guys. As always, I hope you found that useful. I hope you all have a great trading week next week. I'm James Orr, and thank you.